Renewing a mortgage is a process that your bank wants you to think is as simple as ticking a few boxes. But as you read on, you'll discover that there are 6 major pitfalls that could end up costing you thousands of your hard earned dollars. Costly mistake number 1: signing the renewal form. Gone are the days of cozy relationships with bank managers and customers. Banks now discourage this practice as it is proven to be costly. When your mortgage is up for renewal, it is unlikely your bank manager is going to call you up and tell you, "I have been looking in the market and I have reserved the lowest rate for you. Let's set up an appointment this week." What happens instead is about 60 days out from renewal, you will get a renewal form with many different terms: 1 year, 5 year, with their associated rate. Beside the term and the rate is a box that you select with a check mark, sign, and drop in the mail. It seems convenient, and in this busy world, it is very convenient. But like all good things, it comes at a cost. Your bank has a floor rate, lowest, and posted rate, highest, for every term. The renewal form has a rate closer to the posted rate. 85% of all people who get the renewal form sign it and send it back, no questions asked. Your bank will not publish their floor rate, nor will they tell you about it. It is your job to fight for it and hope you get there. Let's say you manage to get the floor rate on a 5-year fixed mortgage. How do you know that the bank across the street doesn't have a lower rate? Any given bank is only competitive one term at a time. This month, Scotiabank may have the best 5-year fixed floor rate. But next month, it could be TD. You will never know unless you go to each and every bank. This leads us to the next big mistake. Costly mistake number 2: shopping at all the major banks. I know this seems crazy. How can shopping in the banks be costly? Besides your precious time, 2 full days if you're very organized, it can affect your credit score and the rate you're offered. Your credit score is based on many factors determined by a computer-generated formula. It looks at the history of people who got into financial trouble and found common factors. Trouble starts with credit card debt, late payments, and shopping for credit. Every time you go to a bank to find out what their rate is, they will pull your credit, and this will result in a lower score. This may or may not be a big deal. If your score is very high, a few points reduction will not be an issue. If your score is good and shopping around takes it over a threshold, you will not qualify for many banks' lowest rates. Costly mistake number 3: not knowing what you want. Decide on the term you want before you start. Know what you want and why before you begin the renewal process. If you fear rates are going up, look long-term, 7 or 10 year. If you think rates will stay low for a while, go variable. Have an opinion and stick with it. You need to know what you want before you can go get it. If you don't have a clue what you want, then you will be lured by the lowest rate period regardless of the term. If you don't know where you're going, any road will take you there. Costly mistake number 4: trusting your banker for advice. I certainly mean no offense to you if you work at a bank, but things have changed over at the local branch since I was young. Now, the person giving you mortgage, investment, and insurance advice was working as a teller 6 months ago. There are no requirements for any of these employees to be licensed. All they have to do is go through the company training program. The training is all about pushing their products to you as much as they possibly can. They are rewarded for it. If they are consistently doing mortgages above the floor rate, they get noticed and in many cases bonuses. How can you trust this kind of advice? None of their training involves knowing about better products at other banks. This would be silly for a bank to train employees about competitors' products. A good friend of mine went into his bank not too long ago, armed with knowledge. He had an almost perfect credit score, a large income, and no consumer debt. He knew what that bank's floor rate was, and he was never offered it after negotiating. He finally called them on it, and they offered it to him. It was not the lowest rate in the market. He called them on that. They would not meet the competition's rate. For those of us who don't have as good a record, and even if you do, what sort of chance do you think you'll have of doing better? He also asked the senior advisor about the bank's mortgage insurance. He was told it was an excellent product and that he should consider it. He asked her how many customers take this option. She replied, about 80%. Knowing about banks' mortgage insurance, he asked her if she had ever read and understood the medical questions asked on the form. She replied it was standard form and it was easy to understand. It was very clear she had no clue what she was selling to her clients, and the banks like it this way. She obviously did not want to hear what my friend had to say about what she was selling, and I don't blame her. She was selling the perfect product from the bank's perspective. The banks collect insurance premiums every month from millions of clients, yet they have no risk as most claims will never be paid. This type of insurance is only underwritten after a claim is made, post-underwritten. When a client dies and the claim is made, then they look into the application form in which most people, 85% according to a CBC report, have filled out incorrectly. The premiums are returned and no claim is paid. Any licensed insurance representative would at least show them how to answer the questions properly or show them a better option. I honestly believe the banks hire people who are not too analytical and don't want to know any more than is required to get the job done. Don't trust your banker. It is not that they are dishonest, they just don't know any better. Costly mistake number 5, not using a mortgage broker. Despite the many myths you may have heard about mortgage brokers, they will save you time and money. All mortgage brokers have access to all of the same products, so shopping for the best rate by going from mortgage broker to mortgage broker makes no sense. Here is how it works. Most major lenders and lenders you may have never heard of give brokers access to their floor rates. Brokers cannot make money by charging you more than the floor rate. They only have access to the floor rate, period. Why would lenders do this? They have no costs associated with the application, time, and staff. Mortgage brokers spend their time getting applicants and submitting mortgages, and the banks, in return, just let them have access to the floor rate. The broker is paid a fee for the mortgage by the bank only when they execute a mortgage. You don't pay for their services at all. A loan officer at a bank is paid no matter what happens with the mortgage. When you go to a mortgage broker, your credit is only pulled once, yet you have access to all the banks plus some you never knew were out there. The broker will then show you all of the rates you qualify for, and you select the best one for you. Mortgage brokers are licensed and well-educated in this field. They can give you advice and explain things a loan officer at the bank may not be able to. Mortgage brokers can do mortgages that banks are not able to. If your credit is bad or you are self-employed, most banks will turn you down. A mortgage broker will have options for you that you would never get elsewhere. Costly mistake number 6, blindly trusting a mortgage broker. Most people don't realize that much like dentists, doctors, and lawyers, mortgage brokers really are specialists in their field and should act professionally. But as you know, they are people too and are susceptible to influences that may not be in your best interest. Some take real pride in the work we do, but how do you know that you have found a broker with this sort of moral standard? As a mortgage broker, I'm here to tell you that although I have access to exactly the same products as every other broker, what may be offered to you by other brokers is not always the same thing. Let's take a look at why this may happen, so you can better protect yourself and make the absolute best choice there is for you. Lenders pay different commissions, and as we all know, money can lead to unethical behavior. For example, let's say that we have 5 lenders and all but one of them have the same interest rate. This one bank has a rate that was slightly lower, but they paid the broker a smaller commission. Some brokers may be tempted to not show that rate. Another scenario that could happen is that all 5 banks offer the same rate, but only one, unbeknown to you, offered a higher commission to mortgage brokers. This could lead to a biased presentation to you that would not be in your best interest, as the terms and options available to you could end up costing you more down the road. Did you know that brokers get paid differently based on the length of the mortgage? Longer-term mortgages pay more commission to a broker than a short-term mortgage, and clients should be made aware of this fact. If you are not conscious of how it may influence what is being presented as an option, you may not be able to detect that you are being led in a direction you may not want to go. Did you know some banks give reward points to brokers for sending them a large volume of contracts? Brokers can use these points for all kinds of things, and not being aware that this practice is going on can also hurt you. And if asked, a broker should let you know that they are being compensated in this way. Not disclosing this information if a broker is asked is wrong, and I would be very wary of anyone being evasive with their answer if pursued with this line of questioning. Brokers are people too, and people are influenced by this sort of thing every single day. But professionals should have the fortified moral standards to not let this sort of thing happen. Allowing oneself to be influenced by this sort of behavior, that is absolutely unethical and unacceptable to me. Brokers must offer all banks as an option to their clients, regardless of these external influences. I firmly believe that is your choice, not mine, to make, which is why I want to arm you with the facts so that you can make the best possible choice there is for you. I am so passionate about this issue that I have a $2,000 guarantee for you. I will disclose to you all of my commissions or points on all of your options. I will not withhold any options that are available to you. If I ever do, I will pay you $2,000. I make this bold guarantee because I know I will never have to honor it. It's an important item left out by many other mortgage brokers. I choose to operate in an ethical manner and disclose everything to you up front because I know if you're satisfied with the work I have done for you, that I will likely be called upon again by you in the future. I also know that if I do a great job, I may even be recommended by you to family and friends. This is far more valuable to me than making a few bucks more by recommending the wrong product to a single client, and it's far more valuable to the people you care about as well. Just like the other professionals you have probably chosen in your life, dentists or doctors, I want to be your mortgage broker for the years to come. I really hope that this short guide was of use to you and that it saves you time and money, regardless of who you choose to help you in this area of your life. If you decide to use a mortgage broker, of course I would welcome the opportunity to work with you now and hopefully long into the future.